All right, so welcome here. This is Liam from Stakecito. I've actually got an interview for you today on the Stakecito channel. We're joined by Eric Chen from Injective. We, of course, validate on Injective. We're super bullish and excited about the Injective ecosystem. Like internally, actually, Eric, we've been discussing like how we can get more involved with Injective, right? Because there's a lot of stuff happening there. It's maybe a little bit outside the core like Cosmos community, but you just have a big presence like across like all of crypto, the Ethereum side of things, the Cosmos side of things. So super interested, man, to get into everything happening on Injective. I have a bunch of questions. The team's been discussing Injective internally, and hopefully everyone watching now can get the latest on where you guys are heading, because you really have pivoted a lot since your launch. It's like a layer 2 exchange on Ethereum, right? So we'll see like how that's evolved as we get into it. But yeah, great to have you here. Where are you tuning in from? And can you just maybe explain where Injective is today and like how can people understand it, new and existing Injective community members?
Yeah. So I'm tuning in from New York City, the Big Apple, and on like a simple high level explanation about Injective. Injective is basically this layer one blockchain that's built for financial applications. Um, it has a lot of out of the box plug and play module for developers to utilize and synergize, including the order book module, which supports both spot and derivatives exchange and different types of very exotic instruments. There's also the Oracle module, which allows for the passing of market data in an aggregated way, where it's like one integration, and then you get the stream of all the Oracle data from all the sources, and a bunch of bridge integrations from all the major bridge providers to make sure that you have extremely seamless access to all the tokens and applications from the multi-chain world. And there's also like a injective native bridge connecting to Ethereum that was secured by the chain itself, which allows for symmetrical and safe bridging of asset between Injective and the biggest asset hub in the space. And yeah, like currently, there has been a lot of very amazing development happening within the ecosystem. I think every day there's some very exciting new project launching, and some of the developments around Helix, Black Panther, Talus, etc., are all very very heartwarming to see.
Yeah, we'll get into the applications in a minute because yeah, I've noticed there's been a lot of applications launching. You have like Astroport, Helix, Talus, Black Panther, and like I know you have more lined up as well. I think I saw things like Mito Finance and a few other things that are coming. But I just wanted to kind of get a bit of perspective on Injective, because as we kind of touched on, or I touched on, like introducing you and Injective, Eric, you started off almost like a layer 2 exchange, right? That was kind of like the positioning initially. And it seems like you've evolved into like this layer 1 solution for DeFi products. You want a bunch of tokens on the chain to be traded. You have perpetuals, you have spot markets, now you have all these other applications coming. But before we get into the applications themselves, I just wanted to understand like how Injective's evolved, like since 2020 or so when it launched. It was incubated by Binance, and you had this like decentralized exchange. But it'd be great to get you to kind of take us through the process of that change internally and externally, and kind of give a real clear insight as to where Injective is today.
Yeah, I think it's a very very natural and almost in a sense planned evolution of Injective. I think what's kind of unexpected is the speed of evolution that underwent for the past few years. I think initially the idea was very, very clear. There is a missing decentralized infrastructure for efficient, kind of like financial applications, for trading, for exchange, for different types of instruments. And it's really the ethos of crypto itself to retain that level of self-sovereignty, decentralization, and censorship resistance. And back then, there wasn't really, this term called DeFi to begin with. And it was very clear that, it's certainly unsustainable for everything to be done on top of Ethereum, including order book exchange, etc., unless you have a very, very narrow or compressed expression of liquidity and venue, just like kind of like how Uniswap went about doing it. And we realized, if you want to be decentralized with that infrastructure to make that happen. But at the same time, you want to make sure that you achieve like the full suite of functionality without compromise on a multitude of core issues. You'd have to build your own like infrastructure, build your own like kind of like an out of box consensus to be able to support that type of infrastructure while providing that utility to back in the day mainly Ethereum, but now to the multi-chain world. And essentially it's like this infrastructure is fairly chain agnostic, but you start off with being kind of like an application itself, because otherwise I think as a generalized environment, as like a layer one that's going to be supporting a lot of developers, a lot of projects, a lot of ecosystem members and stuff like that. If you're not kind of getting your hands dirty and trying to build like the first successful representation of a project, the first product on top of your own platform that has been primarily general public facing, that has been like a very much consumer friendly. You don't know, or you can't have the efficacy of aligning with the developers and building like the infrastructure that's best suited for them. And oftentimes, like that is kind of like the issue you notice when trying to start out with an application, not as like your own blockchain, but also as like an L2 solution or as like a dApp to work out in different types of ways to try to scale that. It kind of was a very, very painful process to say at least. You realize there were a lot of missing stacks. Oftentimes when you ask a question about something, it's like, oh, that team's working on it. You just need to wait. Or a lot of the inherent mechanisms is very much not friendly for a lot of applications and offerings. And waiting for like a upgrade on the base layer is way too long. And I think all those learnings will not be kind of like absorbed and embodied essentially until you actually go through a process yourself.
Yeah, that's got to be really valuable, especially when it comes to the like onboarding process for other applications, right, from third parties, because you kind of know like the steps that need to be taken as you've done it yourself, and you probably put in a lot of like infrastructure there for making it easier for the next lot of people, right? So it makes a lot of sense to me. You touched on Ethereum, Eric, and I think this is just an expansion of the question, like how is Injective best understood? Would you say that Injective is like Ethereum, like a layer one that's an EVM layer one, but it focuses on DeFi products, Helix being the first exchange? Or is there like a better way to draw a comparison? I'm not sure if you're able maybe to do that on the spot for us.
Yeah, I think it's like Ethereum in the sense of like, it has a generalized smart contract environment. Developers can build anything that they want. But I think that detracts from Ethereum is that, Ethereum wants to cover pretty much everything. It wants to be almost like, the decentralized cloud or like a decentralized computer for keeping track of everything and computing everything. And obviously there are, a multitude or a lot of, specific verticals that have asymmetrical requirement for space, for computation, for storage, and it's very hard for you to strike like a strong balancing point for that. And for Injective's case, it's aiming to be like a decentralized financial hub for this multi-chain world. Now, oftentimes, it makes sense for different dApps to deploy their application on Ethereum or on the ecosystem that they're adjacent to, just for the immediate and atomic composability. But for Injective's case, if you want to access something advanced, if you want to have like an order book that's been spun up within the matter of minutes, if you want to have all these like advanced offerings to truly take the ecosystem and the product to the next level, Injective is aiming to be the best destination to do so without having like significant trade-offs, like building like a new application on top of Solana. We're trying to cater to Ethereum users.
Yeah, I obviously we haven't got time to get into all of the trade-offs today, but I've always kind of seen like trade-offs between different applications on a permissionless chain like Ethereum, right? Like you have maybe like an exchange which has a set of needs or a set of requirements and an optimal like design in terms of like how like transactions are processed and ordered, and block space is important. You need fast transactions. And then you have other applications that might need different requirements, and they kind of clash on Ethereum. That's how I understand it today. And like what you're saying, or what I'm taking from what you're saying, which might be helpful for the viewers, like kind of like re-explained, is kind of like, Injectives aligned for anyone who's trying to launch a DeFi product and get access to things like liquidity, the order book, like you say. And basically like all these apps aren't having to compete with other applications that have different needs and maybe want to push like the Ethereum chain in a different direction, for example.
Yeah, I would say the best way to put it, or the most succinct way to put it, is like Ethereum is trying to strike a balance in everything. It's trying to find like the mean of like space, finality, computation needs, etc. Whereas oftentimes like these application suites or these like sectors or verticals are heavily biased towards like a single side, right? For example, like DeFi products might be relatively speaking, more computation light compared to GameFi or something like that. Certainly, nothing compared to like significantly more intensive than like NFT projects, etc. But at the same time, it's arguably a lot more, space intensive. There's a lot of data to be put into it. It oftentimes is updated very, very frequently. And I think the most important part for like DeFi product that's oftentimes kind of like a kind of like a make or break property is really finality. Like probabilistic finality would create so much kind of like a lack of confidence in a certain transaction or settlement during like even a matter of nanoseconds or milliseconds. It makes it like kind of like a significant blocker from DeFi products to really reach the full potential and replace the incumbent traditional financial products.
Yeah, let's talk about like these applications, Eric, because again, initially Injective launched with like this order book exchange, right, which then pivoted to like Helix rather than like Injective branded exchange. And then since then, you've had like a few different applications launched, like Talis Protocol, as we mentioned, Black Panther Fi. So what can you actually like tell us about the application ecosystem on Injective today? What are your favorite applications to use on Injective, and where is this application ecosystem heading? Like what do you have lined up? If you can share some alpha with us.
Yeah. So I think like really like it wasn't necessarily like a pivot per se, but like generally in the beginning, the audience and the impression within the ecosystem is very limited. It's very hard for people to remember more than one name beyond like just the Injective as a blockchain itself. And in order to keep it simple, keep it palpable for users, and make it less daunting, where like they're switching to a full on new chain, they would have to like acquire a native token to like get the gas, which you don't have to do for like the exchange. They might have to set up a completely new wallet, which you also don't have to do for a new exchange. We try to approach the users in a more like palpable way, where hey, like here's the blockchain and here's the first like example application, which is Injective Exchange. And obviously, as the ecosystem evolves, it makes sense to naturally transition this exchange application into what it is now, Helix, with a lot broader offerings, with a lot more features, etc. And that's because Injective as a blockchain can't be picking like a canonical solution like an application. And over time, as the ecosystem grows, it needs to give everyone like a fair playing ground. What is the best possible product? What is the best possible offering? And Helix is kind of like retreating, and should have been done so in a long time ago, into like a equal ground as a exchange application for trading fully on chain order book based products in spot and perpetual, almost like a decentralized Binance / Coinbase out there. and to engage with the users that way and giving everyone else a fair shot to compete against Helix. And yeah, like, even though like even if Helix stuck with like an Injective exchange name for a longer time, they still would have had like a decent chance to compete. But in terms of like when users think about it, right? Like if I want to use some exchange on top of Injective, and they Google it, the first thing that pops up is Injective exchange. So it's kind of like an unfair advantage. And then yeah, like my favorite, beyond Helix for all the other dApps on top of the Injective, I would say Black Panther has been really really exciting. I think they managed to turn some very very simple primitive that's on top of the Injective blockchain for the longest time, but hasn't no one has really creatively kind of like utilized it, which is like a vault/OPC mechanism. And they also utilized a very very simple kind of like a trading concept or like a strategy, which is grid trading, and amongst other things, something that's very very easy for users to understand, to fully accurately grasp it without any type of like surprise, and yeah, like turn it into like a yield bearing, like yield generating product that's profitable for people who deposit into it, and more importantly, continuously innovate with looping vaults, etc. To really expand the offering, and I think that's really really exciting. And on top of that, I think Neptune, that's due for launch soon. It's also working on like a lending protocol that, again, like kind of expands on what people expect about the lending protocol within DeFi, and truly expanding the potential behind it by accepting different types of collateral beyond just spot assets, but also derivatives, instruments, and allows you to give you that like full like centralized exchange type of experience by cross margining a lot of things and collateralize a lot of things to give you the true capital efficient experience. But yeah, I'm not trying to be biased here. I think there's like a bunch out there that are working very very hard. It's just like like based on like our conversation so far, these two are the ones that I think of.
Totally, yeah. And of course, yeah, you can't be, biased towards it when building with them, but obviously you have your own opinions for what you use and what you're interested in, which I think is fine to have like separately. Sorry, I keep looking away. I'm taking notes because it's always interesting learning from you. But yeah, I actually have a quick question, like, because we're talking about DeFi here, DeFi primitives, like kind of like a Binance style product offering in the form of a DEX rather than a excuse me, rather than a centralized exchange. How did Talis end up on Injective as an NFT marketplace, and how does that fit in with like the DeFi and exchange kind of product you're aiming for?
Yeah, I don't think necessarily like if you just look at it on a like 20,000 feet view, that like NFT has a lot to do with DeFi per se, but I think that's a necessary infrastructure as like a a non-fungible identifier and asset to be married well with the financialization aspect of things, beyond just like a random like NFT of a cat or like a monkey, but rather the financialization aspect of it by collateralizing it, bringing it into more liquid venues, creating structured products around it, or borrowing against it. But also more importantly, NFT as the token standard itself, utilized for representing like real world assets, for example, or like individualized instruments, like for example Uniswap V3. Those are typically like non-fungible tokens, right? And yeah, so I think that's overall like very very exciting, and we're really glad to be working with Talis on supporting their deployment and integration, because it's kind of like a 0 to 1 step to bring all these possibility into realization, right? So this means that Talis already got actually we're oftentimes very very surprised by like all the traction and the community members who are extremely excited about it. But they start off with a 0 to 1, which is creating a platform where people can create and access and trade NFT products or NFT assets, and then there's already like a surprising amount of success, and it means that there's a lot of promise on that front.
Yeah, I think NFTs, like people are starting to see like the way they connect to like DeFi, like NFT-fi, DeFi, and like how it's kind of like the financialization of like culture and stuff like this. Like we could go on for hours probably discussing. But I think it is really important to have the NFT component because it's really good for propagating like culture on a chain through like NFTs and art and like community. And then you have like the technical side you just explained there with like the NFT standards and integrating real world assets and such. Um, so before we get on to like say Helix specifically, because I wanted to talk a little bit about that. Something you mentioned about like the comparison to say Binance, I find that so interesting when I look at decentralized exchanges, right? And I look like a complete DeFi decentralized like exchange product, and it's not just the spot trading, it's not just the perps, it's not just the margin. Like Binance has launch pads, it has like an earn product, it even has an NFT marketplace. So it sounds like Injective's trying to get each of these components. So I was wondering which components are not live or in test nets so far for Injective, but will be coming to Injective, things like the Launchpad, for example. Is there anything in the pipeline?
Yeah, there's a lot, and I think like going back to that, like I feel like it's not like Injective trying to like go towards like the Binance direction where it's they're doing their own thing and then here's their offering. I think interestingly enough, it's kind of like a mutual like a convergence towards a single point because a lot of things like such as like NFT marketplace on top of Binance and Launchpad, etc. It kind of already existed within like the DeFi space to much more diversified or bigger scale in a sense. And by Binance saw it and realized that this is like an opportunity that aligns with like their product offering, and they decide to add it to their suite. And for like Helix's case, we also look into products that are available on centralized venues or Binance, etc. That's like, hey, like this is something that can be done in a fully decentralized way, and it makes sense. And meanwhile, the ecosystem as a whole for Injective is also just growing, just like any type of DeFi ecosystem with all these offerings like the NFT marketplace. So I think it's kind of like a very very natural convergence. And then like products in the works. I think there are like a couple of very very exciting products coming out. First of all, there's kind of like a guild product, which is basically allows like a bunch of guys to like all come in together, aggregate their stats, P&L, and basically expand their community, like their localized community, to compete for like a certain prize pool, or like to compete for a certain like a reward. And this means that for example, let's say there's a new launch of a project, and let's take TIA market as the most recent example because they just did their very exciting airdrop. And then like basically people can form guilds, basically groups of similarly minded people, or maybe like very very differently minded people, to kind of compete for volume on this particular market or across multiple markets. P&L in like a relative basis is like even if you have $10, you created like double the return. That's still a very 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 equal metric as like someone who has a lot more money, and also like the overall like size of the guild, like you guys added together created like a very very large CDO. It's basically this infrastructure for allowing people to join up, group together and compete for a multitude of kind of like metrics, and earn like a reward that they get to share between them. And there's obviously a very important role of a guild master, where they get to bring a lot of new members and kind of lead the pack. And this also kind of brings us back to like a kind of like a product kind of like launched during the early days, which is also called Guild, but a completely different purpose. But I think this is a much more fitting product for the current size of the Injective ecosystem, and for the current dynamics as we learn more and talk to more users and understood their needs.
Yeah, I don't want to kind of like stay on the topic for too long because we have a lot to cover, but the way you talk about guilds and like incentivizing like trading activity or other activities through prizing and competitions. I spoke with the Crescent team. I don't know if you've ever spoke with Hyung from Crescent.
Yeah, I believe so.
Like we were speaking about like how do you get people to invest in like the app or like use like applications on an ecosystem, right? Because when you look at Ethereum, everyone wants to hold Ethereum because that's where all the value is, hold the ETH token, but you somehow have to get like the value into the application so they can feed back into the ETH token in the main chain, because like you need activity on all Ethereum's applications to increase the value of ETH. And to do that, you need people buying up these like application tokens, using the applications. And he was talking like about how this maybe was missing for like a lot of chains launching like new. Obviously, in this case, it was Cosmos chains, but every chain launches, it needs to find product market fit. And it sounds like guilds and stuff like that could be really important from a perspective of getting people to use applications on Injective, or getting people to trade like new tokens or invest in new tokens that launch. So it creates that cyclical value of kind of coming back to the main Injective token again. Do you have any quick thoughts on that before we move on?
Yeah, I would say like that's more of a kind of a bit of like an observer bias in a sense. It's like, you know,
Okay.
or like more like a hindsight bias,
Mm-hmm.
where like, you know, you kind of see like the entire history of Ethereum as a community, and then you see like, you know, let's say like taking a snapshot for the rapid growth for the past, you know, like let's say 2 years ago to like 3 years ago during that 1 year period, and then, you know, that's kind of the effect that you observe, which is like there's a lot of token or applications are launching, and you know they have kind of like a inherited value, you know, to the base layer, which is Ethereum, and the demand for, you know, these tokens or these activities or these applications, you know, appreciate the value of Ethereum itself. Um, but I think, you know, that's certainly correct. It's just that, you know, the linkage between, you know, the proliferation of token within Ethereum is not necessarily like a necessity, or like it's not necessarily the cause of it. It might be a signal towards like the end result, which is like, hey, during the middle, it's very natural for a bunch of tokens to start coming up, and you know the final step is, you know, Ethereum being like a very massive community with a, you know, very large market cap for a token in a sense. My thought for that is like, you know, it's really about like application adoption, on, you know, like their own like metrics, etc. In the sense that at the end of the day, you know, stripping down to the bare economic value, like the demand for ETH as a token is, you know, the same as the, you know, demand for, you know, block space and, you know,
Mm-hmm.
computation within the Ethereum network itself. And the proliferation of these dApps and, you know, projects on top of Ethereum kind of increases the demand for, you know, inclusion, right? So this means that, you know, Ethereum as a community itself, and I remember like initially it was almost pitched as like a decentralized app store. It kind of created, you know, this proliferation of applications. Now, whether that's intended or not, it might be, you know, very fitting for like that era or like that time where like a lot of projects are trying to fundraise and, you know, create tokens to bootstrap their capital to build, you know, the product that they wanted. And Ethereum happened to be, you know, the cheapest way, or like the, you know, easiest platform to do so. You know, one click
Mm-hmm.
and you're done pretty much, for a pretty low cost. And they, you know, all converge there. Now, is that the case for, you know, the space today? Maybe not. Like there has been a lot more, you know, like mature pipeline for that specific, you know, type of utility. There has been a lot more, you know, a proliferation of applications beyond just, you know, the 0 to 1 like fundraising for application itself. So it might not necessarily be for, you know, projects to, you know, try to like fundraise via token offering, or, you know, launching their token, etc. It might be, you know, something that's completely different, but it has the same type of like abstract reasoning.
Mm-hmm. Yeah, I'm gonna listen back to what you said there again, because that sounds like really interesting to me. It's really useful, like trying to put together like I like you say, it's all in hindsight. So, you know, there's always that observation bias. But yeah, really interesting stuff. I feel like we should ideally in an ideal world, we do like a 4 hour call and hash all of this out, because you have a lot of really interesting takes. But we haven't got that long. So I just kind of want to, because we haven't got that long on the call, so I just want to run through like a bunch of stuff to give people like a holistic perspective on everything going on with the inch token, the burn, the inflation, the Helix exchange, the investor ecosystem fund, and everything like that. So can you quickly tell us about the Helix exchange? Because I was taking a look at the volumes, right? They look pretty good at first glance. I was looking on Tuesday last week. It's like 2.4 million in spot volume and then 63 million in perps, according to CoinGecko. And I was wondering what types of people were trading on the Injective or Helix exchange. You know, DYDX is known to have a lot of like big money people trading rather than lots of retail, things like Osmosis, Uniswap, kind of more retail traders. So I was wondering, like, which markets do you see trading on, and what sort of people are using Helix?
I think that actually really depends on the market itself. So for example, like one interesting observation is that for the major drivers of volume, like the major perpetual markets, etc., like BTC perp or like ETH perp, the majority of the volume is probably being done by institutions and sophisticated firms, etc. But the interesting case here is I would say basically there's one very interesting kind of like a misunderstanding of people about trading volume is that, let's say this firm itself has like a trading volume of $10 million, and the platform total is, let's say, like $20 million. So this means that this firm contributed to like 50% of volume. Now, it doesn't mean that they are actually 50% of volume. In reality, it's more like them as 50% of the volume of one side, and there's also 50% of volume on the other side. So with that metric coming forward, it means that them as like an offer side or like an ask side or a bid side is as a result like roughly 25% of like the participation, right? So this means that even though, let's say, institutions might be like 90% of the overall volume, or 95% of the overall volume, like most of the platforms out there, it doesn't mean it's just like 95%. It's just like institutions like trading amongst each other. It means that there's also another 95% that could be institution, or it could be general users or consumers that are acting as a counterparty for institutions. And that's one bias. And then the second bias is, more interestingly, every time there's like a discretionary or like a directional market impact on a certain trade, the reverberating effect amongst like institutions, market makers, a hedge out of position is generally like a geometric or like a multiple or maybe like exponential relationship. Like $1 of market impact that creates that takes something out of supply or into supply forever might reverberate into $10 more of volume amongst people like that are trading off of each other to like balance the risk. So for our case, certainly like for the major perps, it's been like mainly institutional heavy because it's a very mature marketplace. But interestingly, for a lot of spot markets, it's majority like retail / spot driven. Yeah. So basically the misconception people have about like DYDX being like largely institutional focused versus like Osmosis largely being like retail focused. I think indeed there is kind of like this imbalance in terms of like capital participation between these two platforms. But generally, like Perp as a product, retail do cause a lot of significant market impact. But institutions generally try to like offload their risk position or their return to like neutral risk neutral position at like a higher multiple volume compared to like spot. And so this means that it is likely true that like majority of DYDX are like retail participated, but I think it's also important to know that like if the institutions just market make and post order there, not really giving out like taker flow, like there won't be volume at all on the platform. So yeah, interestingly, I think that is kind of like the current state of participation bias between perpetual platforms versus spot platforms.
It sounds like it's more of a symbiosis between like retail, let's say, and institutions, market makers and such, rather than it being like one or the other.
Yeah, I think like it depends on the product out there, really. Like for example, eBay is 100%, retail participation. But
Hmm.
like for general, size or like when there's something like that has a certain level of consistency, institutions end up jumping in because when you can establish like a pattern, you can create like a strategy around it. And full retail participation generally implies that it's in its infancy as like a asset class or like a maturation cycle. Yeah.
Hmm. Yeah, that I understand a lot. You can look at that as well with like, ETF products and such onboarding a lot of institutions because they know how that operates, for example, like for say a Bitcoin ETF. So I can kind of like look at that and apply it a bit to decentralized exchanges as well. So it makes a lot of sense. I wanted to ask you, Eric, in relation to Helix still, I've seen obviously the trade and earn program. You've had it going for quite a long time. I think there's a governance proposal to extend it for another 8 weeks. So it's been going a long time. And I'm sure it definitely incentivizes a lot of markets with trading activity. So I was wondering like how that came around, because I know it's been a long time now, where it is today, and what your thoughts are on the incentives. Is it working well? Could it be better? Just wanted to get your thoughts on the incentives, and also share with the people listening
Yeah.
how they can like earn
I,
while they trade.
yeah. So train and earn got like a rework. Where now it's like train and earn like 2.0 essentially, where it's like,
Mhm.
the community voted on, going towards a direction where it's like, train and earn will be, completely focused on like, new offerings and new markets. So, if you participate on like, existing markets or like, older markets, unfortunately, you won't really get any like meaningful like TNE rewards. And basically the goal for like train and earn, initially it was to ensure that like there's a natural balance between the cost of onboarding to a new platform and also engaging with like a share market trading, like just perform your daily activity, um, and also like kind of like the reward to keep it like kind of in parity. And it plays into different factors like cost of capital, opportunity cost, etc. And during like a DeFi summer and like during the previous bull market,
Mhm.
the opportunity cost was extremely high because I can do the exact same activity at like 10 other places, but other places I get much higher in terms of reward, which makes TNE kind of not really fulfilling its purpose and creating like a fairly like inefficient way. And thankfully for the past year or two, when the market calmed down, etc., obviously with a lot of blood, sweat, and tear along the way, um, it became like an actual like kind of like a campaign or like initiative that achieved its intended effect, which is alleviating costs of onboarding a new platform. Most importantly, offsetting like the cost of trading or doing their usual activity to a point where it's pretty neutral. The cost of bridging over, like doing things, undertaking risk little by little bit, and then the cost of trading is roughly the same as the TNE reward you're entitled to. And now with the stage of Helix, and also like other exchange applications, TNE 2.0 is to essentially target like adoption of like new innovative markets that are not available in anywhere else. So for example, like TIA expiry futures platform being the first, and I think pretty much the only for the longest time, kind of like a platform where people can like kind of bet on and hedge against like the offering or the eventual price of the TIA token. And there's a bunch of new markets like TIA spot market itself being one of the first like order book venue for it. That also beat Binance initially for some reason in terms of liquidity for like a spot. And it's really putting like the power and concentrating on new market to boost adoption. And there's another higher implied risk because the new market, people participating and have no way to like hedge it. It's very hard for them to return to delta neutral. So actually, I think TNE 2.0 will serve as a very very important boost for people to get this like small reward for participating in a new frontier of markets. And yeah, like I think the easiest way to earn T&E reward is just look at the multipliers, whichever one's 50x, you just engage with those markets. And yeah, that's how you earn it. And oftentimes, it's pretty asymmetrical. A couple of dollars of volume could mean, like 50% in reward. And that's because, it's a new market. So it's definitely high risk. And, there's a reward from taking on the risk.
I was playing around with Trade and Earn on Say network on the Say token, Perps. I think was it Perps or Spot? I can't remember. I think it's Perps you had
Probably
for
Perps.
Say. Yeah, and it was like 50x. And I was like, oh, okay, I'll just give it a little go. And I think I just like lost $500, but I made it back plus like $200 in Trade and Earn. So it actually like balanced it out pretty well. And obviously I contributed to the market's volume. So I can definitely echo that. Like these 50x multiplier markets are really interesting because you can play around with strategies as a retail trader and have a bit of fun with it and probably get back a lot of your losses if you're doing a lot of trades. Because my trades were like very small trades, and some of them I made like 2-3%. I was using like 10x leverage, and other ones I was losing, and it was just kind of like tested out. Wasn't successful. I'm not a trader, it turns out. Who knew? But yeah, it was really good. Also, I love this idea of like using Trade and Earn 2.0 to bootstrap new markets or to kind of like onboard new users to Injective through like the new launched markets where there's excitement and a lot of trading activity and a lot of other options for where they can go. So I think that's a really, really good model. I really like that. I've been saying for a long time for Osmosis, like incentives for like new listings on Osmosis is like super important for onboarding like tokens there and activity. And it sounds like what Injective's doing with Trade and Earn 2.0 is possibly going to be quite powerful. So yeah, I really like that. Let's move on to Injective Tokenomics quickly. I just wanted to sort of like give this image to the people watching or listening as to like what the Injective token's about. So like I was doing a little bit of research, right? There's about 10% inflation at the moment on the Injective chain. APR for staking is around 16%, right? So there's new Injective tokens coming into circulation that's securing the network. And then at the same time, there's this burn mechanism, this mechanism where Injective tokens are used to purchase up fees from the Injective exchange and then are burned to create a deflationary effect. So it's been estimated like 3,000 Injective was burned last week or something around that level. So what can you tell us about the Injective tokenomics? Like, what was the intention behind this design? What do you see in terms of like the burn side of it? What are your thoughts on the new supply coming into circulation? And what do you think's going on? Why is Injective price doing so well?
Yeah, I think the token itself is like quite simple. It's primarily used to like secure a network. So the more delegations, the more like staking, the stronger like the network becomes, which is proportional to how much confidence people have with like putting their assets or doing their activity on top of Injective as a network. I would say like I believe the inflation might not be 10%. I think it's like roughly the target inflation is like 7 or 8.
Okay.
And I think that's probably like going to be adjusted like here and there. But basically, like the burn mechanism is kind of like a way for these exchange applications to generate value, and it actually didn't start off with like generating value for like these type of exchange applications. It's actually meant as like an anti civil mechanism, where it's like basically like if there's no base fee within the platform itself, this means that their volume is going to be like all over the place. It's going to create inaccuracy, and volume being like a track index is actually fairly important. So might as well like introduce like a fee mechanism. But then it becomes a problem where like where does the fee go? And it doesn't. It creates like a kind of like a honeypot issue of it just aggregate over time, where people can just take over like the governance and try to like take the funds. So it's a lot easier to just create like a routine like auction and burn mechanism to just get rid of it, offset a little bit of the against like the inflationary value. And I think like until like a few months ago, it was actually like positive. in terms of like the network being like deflationary. But I think with like the volatile nature of like these tokens, sometimes it became really valuable, and then like the tokens being burned is like lower. Sometimes it's not as valuable, but the dollar value is the same, so like more token gets burned. So I think it's a fairly dynamic, like self-evolving like effect. So yeah, I think that's like a pretty balanced approach towards having this financial infrastructure that's trustworthy, and people can engage with it, and at the same time making sure those who secure the network are compensated in terms of native token itself.
By the way, I think it shows us like 10% inflation on Mintscan, by the way. So I don't know, maybe they've got it
Oh,
slightly wrong with the numbers. I don't, maybe they calculate it like at the start of the year or something, and then do it like as a percentage of that rather than current supply. I don't know. But yeah, just so you're aware, maybe that's like,
yeah, because it's interesting because the token on top of Injective as a blockchain is not like the totality of like the token for INJ itself, because there's also like a ERC20 version of it. So for the sake of calculation, it's based on like whatever it is available on top of the chain itself, which is whatever is like on top of Injective blockchain, plus whatever is not on the bridge contract of the Ethereum network. I think that's the total of it. And that means like the inflation might be higher on the chain metrics, but because of what's sitting on Ethereum might be lower.
Yeah, this makes total sense, because they're probably only looking at the Injective chain for their metrics. So yeah, that's good to know. Speaking of the token, I actually wanted to talk about the ecosystem fund, right? And then kind of ask a question about like Injectives, like I don't want to like talk about the price specifically, but it's clearly been doing very well. You don't really need to even be super active in the space to see it's trending. It's performed incredibly since January. And what happened in January is you had some more backers come in and support an ecosystem fund, right? So Injective supported by Binance, Pantera Capital, like Mark Cuban. And then you did, I assume, like some sort of raise to get this ecosystem fund going. And there was people like Pantera and Jump Crypto that got behind this ecosystem fund. And that happened in January, right? And in January, the price of Injective was about, or the inch token was like $1.50. Fast forward to today, it's like $13 to $15, depending on like the day trade swings that are going on in the price. So my question is, what do you think the reason for Injective's token performing so strongly in the current market? Like it's trending clearly. I don't, I know you can't talk about price too much, but I'd be interested to hear why you think that's happening. Is it because of these institutional backers? And I want to know like how they're supporting Injective with that ecosystem fund, and are you using that to onboard applications?
Yeah, I think the Eco Fund has been very significant in terms of like bringing on projects, like a lot of projects that came on, deployed on top of Injective, and more importantly, the projects are currently under works are all supported by the Eco Fund one way or another. And then basically it has a very, very long like time horizon, but concretely more like it has a very long like a stage commitment. Basically it goes from like all the way from a pre-seed, which is very, very low check amount, all the way up to like I think like way past like off public offering or like token launch or whatever. So it's also like allocated proportionally to take care of like all the ecosystem projects from the as early as pre-seed, as late as doing like their like giant like I don't know like 690 million point 442 around. And so that's kind of like what the eco fund meant to be. It's like a place where like no matter what stage you are, it's always there to support you in like the like a corresponding size.
Yeah, sure, absolutely. And have you seen how much of that fund's been sort of spent since January? Do you know?
I don't think there's a lot of it being spent relative to the massive size. I think it has supported like 5, maybe 10 projects so far. Roughly in the range of like a pre-seed to seed stage. There's been a lot of application, and would have been a better idea to have like a full time dedicated team on that, and that we're also working on. But yeah, like it's been doing a lot of ecosystem support, and a lot of them ended up being like consumed by like the backers themselves, which is like, oh, like we really want our name to be put behind this project, etc. And I think there are a couple of big rounds announcing soon that are coming out. But I think like it's one of those initiatives that's set up like half a year ago, and you don't see like they're full swinging like rising tide of bubble effect until like a bit later when like things come out, and then more and more quality projects ask for eco fund and stuff like that.
Yeah, awesome. Thanks. That clarifies a lot. It sounds super important as well, from what you're saying there. So that's quite interesting. I know what you mean on the human side. Like there's a certain level of like human resources needed to kind of do like onboarding for applications and like supporting the ecosystem. It's not just the money, right? So hopefully you get that team together, when you get the time or the resources. Thanks, Eric, for coming on. I know it's gone on a little longer than maybe you hoped, so hopefully it's not taken too much away
Nice.
from you for the rest of the day. But I just want one more question, really for people listening. It'd be really good to know like what the Injective team sees, like the space going towards in the next 4 years. Because in Cosmos, DYDX has launched, Celestia has just launched. These are massive chains that are all sovereign now. Injective's been a sovereign chain for a long time. DeFi is kind of coming back around again, almost like a second wave for DeFi. NFTs are like down and out, but still around. A lot of people say. So, what's your like team's like view of the space? And then once you've explained that, maybe just share like where people can learn more about Injective for those watching who want to get involved.
Yeah, I think if you asked me this like a year or two ago, we would have had a very concrete answer. It's like, oh, like maybe rollup or like maybe ZK, etc. That's going to be like the main driver, or like maybe like a DeFi like evolving into like a financial hub of the entire world, not just crypto. Um, but like now, coming to think of it, I think the space has matured so much, and there's been so many like surprising like applications with product market fit where like we're where we're very comfortable with saying it's just you just want to know. Yeah, like sorry for the bad answer, but like it's also like a very very good answer. As in like it's a very optimistic answer. It's like it's we're ready to be surprised and like ready to welcome any type of new trends and new opportunities that this space welcomes, right? Because like who would have anticipated like such a big shift in the AI landscape that starts bleeding over and like marrying like crypto and the technology behind it, and we're basically welcoming like all the kind of like narratives and trends out there. And yeah, like to learn more about Injective, easiest way, injective.com. Just go there and then you get all the info you need.
Fantastic. Yeah. Very wise answer, I think. It's like you say, the space evolves so quickly, everything changes. But everyone always likes to try and predict things, right? And speculate. But yeah, thank you so much, Eric, for coming on. I know you've got things to do, so I'll let you crack on, and we'll keep in touch for when this goes live. Yeah, thank you so much.
Yeah, appreciate it. Thank you so much.